Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast, episode 31. What is up, my dude? It is Wednesday again. Today's date is August 1st, 2018. We're halfway through the week, people. My name is Nathan Oliphant, and with me, as always, the gluten-free Jason Bessing.
The gluten-free.
How are we doing today, people?
I'm doing good, bud. I'm doing good, bud. How are you doing, man?
We're doing great.
Doing good.
Yeah.
I'm excited.
Great. I'm excited for
Today
tomorrow.
was just I don't know, I had a good night's sleep last night, and sometimes it's just rare these days. So, like, I've kind of been, like, lively today. It feels great. It feels great, man. We missed you, you know. They had to deal with me twice.
Unbelievable.
Disgusting.
We probably lost some viewers, some unsubscribers.
Disgusting.
Yeah.
That's okay, though. Hey, the OGs are sticking it out.
So hit us with those numbers, baby.
Today, we have Bitcoin right now at the moment.
Whoa, you starting with the coin.
I'm starting with the coin. You know, honestly, it was right there. It was right there. So Bitcoin right now sitting at 7,498. We'll call that 7,500. Nice, easy number. Just down and sideways for the day. Just if cryptocurrencies had a climate, it's wet and rainy.
Bitcoin's at 7,500.
7,500.
That's down. That's down from the 88 highs.
Yeah, but it's also up from the 64 a month ago.
Okay.
So
but like,
we're popping up and then doing nothing, selling off a little bit.
Yeah, it's correcting itself.
We're taking steps, taking ladders here.
Yeah,
taking
there's people
three steps up, 2 steps back.
There's people who are buying and then selling, and then there's people who are holding during those buys, which it kind of holds that price.
Oh yeah, maintains that value.
Yeah, we need bigger buys than bigger sells with Bitcoin. Of course, you always need that if you want.
We need heavier influence.
Growth,
we need Wall Streeters. We need Wall Streeters coming in. We just need billions to start flowing into this thing.
Prostitution to take over.
Oh my God. Imagine like mutual funds. Anyway, right now Dow down 81 points. Awkward. Nasdaq up 35 points. S&P down. I'm gonna call it nothing. S&P sideways. So pretty much a sideways day all across. It's weird that the Dow is down today because Apple was so strong. So I kind of expected it. I mean, I think maybe it's because everybody expected it is why it didn't happen. But I expected a heavier move in the Dow, especially the Nasdaq, based on Apple. But that is just not the case today. Apple did well, had about a 5-6% day, but
that's huge.
Not enough to influence the markets. The rest of the markets wanted to sell off.
The Nasdaq had a huge pop after hours yesterday.
It did, all based on Apple. Everyone got excited. Everybody got greedy. I'm not a fan of after hours, to be honest. You know, the institutions aren't putting in those floors, those bottoms. You know, those moves, those technicals after hours, those aren't necessarily accurate.
Okay, so what if it's like a bigger, like 4 or 5% move? Is that like?
I mean, some of them are definite, like boom, 17% up, and it maintains it the next morning. That happens, absolutely. But that's few and far in between. Like, you might catch it, you're probably not though, because I don't know. It's just that those institutions, those big players, they're not there. They're not influencing the stock price. So it might have a huge rally up, and then the next morning gap down way off of that because the institutions had a whole different agenda. So I don't know. It's just weird. It's weird. It's the things don't work out the way that you expect them to work out, and they don't. They do and they don't. It's just, what was the opening line in Big Short? It says, "It ain't what you know." What is it? It ain't what you don't know that doesn't hurt you. It's what you do know that just ain't true. So saying, like, your smarts is what kills you, not your dumbness. Anyway, but yeah, that's your markets for the day. Apple, definitely the major market influence on the day. But anyway, let's go ahead and pop over to market news with Nathan.
All right. Speaking Yeah, of course.
Oh, let's go. Let's do the damn.
Mutual funds with Bitcoins. Um, the Winklevoss's ETF for Bitcoin got denied by the SEC a second time.
Yeah, that was last week. Unfortunately,
Yeah.
that was like right after my podcast last week, my rant on diversification.
Yeah. So if the SEC ever allows that Bitcoin ETF, I think the price of Bitcoin is going to skyrocket.
Well, that's how Wall Streeters are going to move in
Yeah.
because they're going to
It's going to give so much access.
there's and I feel like I don't know the exact details. It's very complicated, bro. Very complicated. But you know how like a lot of ETFs don't actually hold the asset? Like a lot of gold ETFs don't own gold. They're just based on the price. So I imagine that an ETF will actually have to own the Bitcoin
Yeah.
in order to get the accurate reflections.
I think the Winklevosses are ready to buy the Bitcoin.
I think they want to. Dude, they want this to happen, dude. They will make so much money. They want to be the first ones to do it.
So, other news coming in hot from the White House, we got Donald Trump considers 25% tariff on $200 billion of Chinese goods. I think that's an increase, correct?
Yeah, here we go again. It's a 25% increase.
I think it's probably the same commodities or whatever.
Oh no, it's all the same shit.
I think it's like weird, like
Same thing, different day.
yeah. Let's see what else we got. Anything in the companies wise? Company in the SPY?
What do you mean? Like earnings wise? Like
Any
any interesting?
companies? Yeah, anything in the
Oh, well,
BTC?
Apple, I mean, obviously Apple was a mover. We had Tesla after hours just released earnings, who lost more than expected but is up.
I love it.
Dude, remember my tangent on Florida real quick? This is also why I love Florida. I just watched a lizard hunt a moth. I
Yeah,
love it. It was beautiful. It was cool.
the Florida
Anyway,
man.
I just watched it and I had to share that real quick. Anyway, yeah, those were basically your market movers. Nothing much exciting happened. Federal Reserve leaves interest rates unchanged.
Okay, hey,
That was
there's
expected.
some news. There's the housing slowdown. That's news.
Housing slowdown.
I think that's huge. Okay, and
Huge.
I've heard it's on a 3 month, and 3 month is a pretty good pattern indicators. Um, I think that the Federal Reserve will take that into consideration, and we need to see housing numbers coming up. If we see like steady, no change in housing, what is it, housing sales, I think the Federal Reserve is going to take that into effect and not increase.
I think right now, dude, I'm gonna do my research. Make sure I do it. There's a site you can go to that I think that's connected directly to the Federal Reserve that tells you. Oh, it's the CME group that tells you
Yeah.
their sentiment on the next Federal Reserve meeting and the outcome. I think they said it was 2% that they were going to raise rates this time, but 94% in September.
94%,
But
like
chance
raising
that
rates.
they're chance that they are going to raise rates one
Oh, well, okay. They were
25
predicted
basis.
to do it. Okay, but listen, the GDP reports came out. We got that 4.1% in the quarter.
4.1.
Yeah,
Yeah.
and that's like not before they adjusted or whatever. Blah blah blah.
Hmm.
Um, that's like they need to take that into consideration because that means inflation's gonna fucking skyrocket through the roof, and that's not really good for the price of the dollar.
The cost of housing is rising and wages aren't matching it.
Well, yeah, then
Wage
people
inflation
people
is
people
not
stop
happening.
people are stop spending money. Why would you increase rates? It doesn't make sense. You're gonna make the poor poorer. I mean, that's
I
okay.
mean, they
That is
have
what
to.
happened. That is what happened in 2008 and 2007.
The tightening of the rates.
No, yeah, they just kept fucking raising them.
Well, I mean, it's gonna happen again, bro. And I think this time it's gonna be student loans.
They're
Yeah.
just gonna uncontrollably. If they're just gonna uncontrollably raise rates.
Yeah. I mean, think about it. I'll be honest. I'm a student. I was a student. I have student loan debt. But if the rate gets unpayable, fuck you. I'm not paying it. I got to pay off my car and I got to get gas, go to work. Like if I can't afford, I have absolutely no problem not paying my student loans.
Can't you go on like income like based payments and stuff like that?
You can, but I mean, so people will still choose not to pay it. People won't do that. People aren't going to call and say,
Hey,
"Yeah,
dude,
let me
just
work
fucking
out a
do it.
plan." They're just going to simply not pay it. We're Americans. We're dumb like that.
I figured I could still save and pay off some of my debt. I figured that out the other day.
Yeah, I'm doing it. Dude, I run that number every day in my head. How can I fix one to fix the other? You know, if I have less debt, I can make more money. But if I had more money, I can pay off less debt.
Yeah, so I think that's it for news.
Pretty much. Dun 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 dun
Yeah.
dun.
Join us next week.
All right. Well, let's go ahead and move on over your market terminology for the
Oh
day.
yeah, let's get it.
What is preferred stock?
Oh, it's like preferred stock. You want me to do this?
If you wanna give it a stab.
Yeah, I'll give it a stab. I'll give it the whole fucking carving.
Okay.
Preferred stock is treated like a bond almost. In fact, it's like right below when they get paid in the event of a bankruptcy, they get paid right after the bondholders. They also get paid dividends first, correct?
Correct. Correct.
And other than that, I think it trades just as the stock trades, right?
Yes and no. So basically, they are shares that are issued, but are not equity in the company, rather promise notes
Nice. So
that agree to pay a certain yield for a certain amount of time.
that's more like how it's more like a bond.
Yes, but they're usually like $25 a piece or $30 a piece. You buy shares. The advantage is they're not susceptible to the bond market, they're not susceptible to the stock market. They're just linked to the business. Some of the downsides is they don't have the potential for growth opportunity. They are, remember, they're not part of the business. They're just one of the bills. You're helping keep the lights on. They borrowed some money from you, and you can trade these shares. They do change in value. It's not much, but they do. But that's a different ball game. That
There's
goes
a
back to the Fed rates and
there's an ETF that write this one down. There's an ETF that trades preferred shares.
yeah, it's actually one of my favorites. It's PFF.
PFF.
PFF. It is a preferred stock fund. It doesn't grow almost at all. It did coming out of the recession in
Pays
the
a
past
dividend.
5 years, but it pays a nice, juicy, about 5.7% dividend yield, and it also pays monthly. So nice, juicy little dividend ETF opportunity there. So that is your market terminology, preferred stock. If you have any questions, comments, concerns, suggestions, insults, or corrections, please email us at rebeltradinggroup@gmail.com.
We have
My
a
name-
stock twits
We now have a stock twits. Find us, Rebel Trading Group.
at Rebel Trading Group.
At Rebel Trading Group, we're on stock twits. We're gonna be on there having fun, talking to y'all, talking to people.
Plug.
But yeah. Anyway, so go ahead and let's move on to today's topic. Nathan, this was your idea. Hit me with it.
I don't have time to invest.
What? You mean you don't have time?
We have an
Well,
episode really on like how
I
to do
know.
that.
Let me just send you a link to our episode. But seriously, like think about it though. Like let's break this down. People have told me that like I don't have time to be looking at stocks. Meh, 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 meh.
I
Okay,
get
what?
that. We get that.
I
We
do get
work.
that. It does take work. It takes effort. It takes research. It takes number crunching. If you like want to be good at it, unless you just want to be willy nilly. But the mindset to maybe an outsider is that it consumes a lot more time, or that you have to like constantly baby it, and that's a complete myth.
Yeah. Here's the thing. I think like it used to be like that. It used to be like I don't have time. I don't have time to call my broker. I don't have time to tell him to buy 100 shares at this price.
Hmm.
I don't have time to.
Watch, see,
I don't have time for him to tell me to buy 100 shares at that price.
yeah, or get the newspaper and look how my stock did yesterday. Because that's how it was like in the 90s before E-Trade and all the mobile trading that is available now. Before then, it was a complete hassle to invest, and it slowly got better over time.
Correct. And I feel
And
like nowadays it's much more accessible, and you do have the time. I feel like it's not really an excuse to save for your future.
yeah, it's a piss poor excuse. Absolutely, it's an absolute piss poor excuse because at the end of the day, you're gonna be paying somebody else. If you don't do it yourself, you're gonna be paying somebody else to manage that money for you, and that's completely fine. but you have the potential to save so much more money if you just do it yourself. Save money, and that in turn makes more money.
You don't
I
even with a discount brokerage, like maybe you don't want to use Robinhood, you don't trust it for some odd reason.
You want
You use
something a little
you do
bigger.
E-Trade, let's just say.
hmm
Even just like putting money into the account. I know some accounts that give you a percentage back on cash sitting on hand.
Oh yeah, there's a lot that automatically transfer your cash into a money market account and pays like a 0.5%, 1% a year. Nothing major.
If you just like add like little bits, just set it up automatically. And if you
Yeah,
know you're gonna need the money, plan for that. Be smart. You know that you have this going, and then you
yeah.
can turn that off for that week.
hmm You just consider it one of the bills.
Yeah,
Like, do you not have time to pay your AT&T bill? Do you not have time to put gas in your car? Like, you have time to do a little bit of things here and there. And you have time once a week to sit down. Okay, what's going on in my portfolio? Okay, is it good? Okay, fine. Um, we do have that set it and forget it investing episode, and
yep.
that's one of like my favorite styles of investing. But I think a lot of people are completely oblivious to the whole idea of ETFs and funds. Like I didn't know a thing about them before I was trading stocks. It's not a thing that you really hear about in everyday terminology. But a lot of people don't realize that those baskets of safety stocks are out there,
Yeah,
and that basically if you pay somebody else to manage your money, they're going to charge you a fee to put you in those same exact things. You know what I'm saying?
exactly.
And it's almost bothersome, like, because you're trying to help these people and then they just instantly shun it away, and they're not open to like, okay, well, what does it take? It doesn't take hours if you're trying to day trade, yes, but
It, I feel like ETFs are macroeconomics.
that's all it is. That Oh my god, that is a beautiful way to put it, Nathan.
Yeah. When you're looking at single stocks, microeconomics. But if you put those all into a bigger stocks, you're getting macroeconomic trends.
Exactly. And you're able to even play that to sectors. Like, okay, housing rates are going up. Is it a good idea to jump into mortgages right now and maybe even real estate? Probably not. There might be better areas. Tech stocks are at an all-time high. Is it a good time to jump into those? No. There's a lot of macroeconomics that happen on your everyday life that you hear about, Trump trades and tariffs and stuff that can impact stocks. And as long as you can put two and two together, you can just jump into a fund. But you know what? It doesn't even have to be that spread out. You know what I'm saying? For example, like, you can just play the S&P. Somebody can just make that their entire retirement
Exactly.
portfolio, and that takes all questions out of it. And you can set that up to you can literally set it and forget it. You can literally set up your E-Trade account to pull money out of your account and buy a share of S&P 500 every single month.
Ticker symbol SPY.
SPY, baby.
Pays a dividend.
Or you can hold a basket of that and a little bit of international stocks. Like, as long as you know kind of a general idea of what you want to do, that's all it takes. There's not much more thinking beyond that. As far as funds go, single stocks, completely different story. So once you identify your flavor and who you are as an investor or a trader, then that's when you can pick these funds and what you want and how you want to grow your wealth.
And
And once you have that idea, it doesn't take any time.
ETFs have a lot of like attractiveness to people with lower risk tolerance,
Oh, absolutely.
and so it's easier for people to get into ETFs and trust the averages of a sector than it is to just buy and trust and hope that a company is going to do well through
Oh, yeah.
a
And
5 year
then,
spread or a 10 year spread or something like that. I don't know.
oh, absolutely. Well, there's also long-term history. Look at the S&P over any 10-year period. It's gone up. It's never gone down for more than 3 years in any 7-year period. Never in history. Stocks have a long-term general tendency to go up,
Markets do.
and markets do. Yeah, almost every financial market, bonds, commodities, everything. That like this is
we
how.
can say that.
Yeah, you can say that. Cryptos do. Like
Why did you kind of stutter when you say that? Cryptos.
because I was kind of joking. But no, it's absolutely true. And once someone has identified, okay, hey, yeah, I'd like to be more involved in stocks, but I don't have enough time. Okay, well, what do you want to do? Oh, I just want to make more money and kind of go with the market. Okay, it doesn't take time to do that. I don't get the argument.
You just put in a share for the SPO. I'm literally doing it right now.
Like you're just looking at it, you're like, oh my god,
Yeah, I'm putting in a limit order right now.
I love it.
And I wish we had the live feed to.
Oh, that's gonna come soon. I think a lot of the I don't have time is the same as the I can't afford to.
It's
People
just
don't
another
understand that you can put
excuse.
in a few bucks. It's a lot. It's just an excuse, but there's also that mindset. Like there's that instant thing. Like it's all stockbrokers, Wall Street, math. You got to know what you're doing. It's fast. It's high moving. The stock market crashed in 2008. Like people just instantly kind of see it as like, oh, that's gambling. I don't know. I don't want to do that. But then you have the thirsty motherfuckers out there who are like, dude, I'm trying to make some money. Like I'm making extra money and I don't know where to put it. Those people are ready to go because they have that understanding. So it really just it's I feel like it's all based on mindset and how you're conditioned to think. You're conditioned to kind of just turn away from that. Let Wall Street do that. Just put your money in the savings account.
You can.
You can work till you can also work 40 hours a week and work till you're 65, collect your social security check and fucking die. Like
Overall, the price will go up because you'll add to it, but God, man, it's not doing anything, it's just sitting there.
not doing anything. People need assets to create wealth. You have to have them. Every retirement portfolio is built on some sort of asset. Even if it's not stocks or bonds, it's real estate or somebody started a business and it just took off and they sold it. Wealth comes off of assets. Doesn't come off of going to your 9 to 5 job, putting it into a savings account. You will not fucking retire. I swear to God. If you made 0.25% a year on your savings account,
God.
which is what they do. So let's be generous. Let's be generous. And you said you made a 0.5% a year. You know how long it would take to double your money? It's like in the ballpark of like 60 years, 70 years. It's disgusting. But that's how we're all bred. That's how we're taught, you know? Can you agree with that?
I suppose so, yeah.
But
But
then,
people, we have a passion for it as well. I mean, in anybody else's defense.
we do. But you also, I remember when we first talked about it, we were at the local watering hole. And I was like, oh, I was telling one of our friends that I was kind of getting into it, and you asked me about it. You're like, yeah, I'm starting to get a little extra money. I'm kind of looking to make a couple extra bucks off of some savings, and that's kind of how I started to um, share that with you, and we got into it together. But that you were thirsty, like you knew that stuff was out there, you just didn't know much about it. So you heard it, and it piqued your interest. You didn't turn away interest like, oh, you're just wasting your money, bro. You're an idiot. You didn't do that. Ooh, what? But no, it's funny. The friend I was telling the story to, you know exactly who it is. He said, oh, you're an idiot, bro. It's all gonna crash. It's the complete other way around.
If it crashes, I'm buying more.
Dude, I'm about it.
I'm gonna work and save some more and buy some more.
You have to. Like assets need to be purchased. They need to be part of your portfolio. That's where money comes from. So I think it's all in the mentality. The whole I don't have time or I can't afford to. Like if you just shut up and sit down, like in the song, shut up and sit down. If you just shut up and sit down, open your ears for 10 minutes and get educated, maybe you'll be like me. Maybe you'll be like Nathan. Like, wait, why doesn't the rest of Americans know about this kind of stuff? How do people not know about dividend reinvestment? Wow.
Drip, baby.
Mind-boggling. Anyway, um, what are you watching this week, man?
I'm watching ticker symbol F.
What?
Yeah, baby.
Oh, why are you
Oh,
taking
come
forward?
on, yeah.
You know it's mine, and you know we're not allowed to use it. But you know I'm gonna give you a pass because I did miss you.
I like
So
Ford
what is it?
at this price. It's reaching its all-time, its 5-year lows. Um, it's consistently paying that dividend. I like that. I like that for a long-term hold. I think it's on a dip. I think it's on a cyclical cycle. I think auto industry's on a cyclical cycle, and I think we're on the down cycle.
Cyclical cycle.
You know what it is.
So you think it's a good buy? Is it a long term or a short term?
Yes, hold on. Buy like 50,000 shares and just hang on to it.
I think the yield is over 6% right now. Because
That's
she
nice.
also pays a special dividend, and a lot of brokerages don't count that in because it's not a confirmed dividend. So, for example, Ford pays 4 dividends a year, every quarter. They pay one every quarter. So that's 4 a year. They also, around the holidays, I think it's around like the 20th of December, they give an additional 5 cents per share. I imagine that's kind of like a family Christian right wing thing, but whatever. Um, So if you account that extra 5 cents, I think that puts the yield well over 6.5%. And you know my favorite thing about Ford, Nathan, is they have that $21 billion in cash reserves in order to ride out recessions and pay shareholders. So that gives them like 7-year dividend sustainability, some to that effect. So they're a very well run company. You remember they're shutting down like most of their production for the year.
Yeah,
You heard about that?
they cut like the types of
They're only
cars they were
selling
doing.
Yeah, I think they're only selling trucks and Mustangs. I think that's literally the only things they're selling. That's good though. They know when hard times are coming. It's not good for the people who work for them. I hate to say it. Like there's probably a lot of layoffs and stuff, but God, we're greedy shareholder dicks now. Fire them. Keep the dividend. Fire them. 60,000 off the payroll. Let's go. Hike that div. Hike that fucking div. Let's go.
Shareholders.
Let's go, baby.
What are you watching?
I am watching MGM Resorts.
Oh baby, huge
She's
news
one of
today.
she's one of my favorites because I just think I love the company. I love the business. I love Las Vegas. I love the hotels. I love the themes. I love their marketing. I just love them. I think they're very good businesses. And they took almost a 10% drop today, and I'm okay with it because I have a very long-term outlook on her. Took almost a 10% drop, and I think that's off the back of Wynn Resorts earnings. They were very dismal, if you will. Wynn, got to write that one down. And yeah, so I think that's off the back. So we're expecting weaker earnings tomorrow on MGM Resorts. I'm going to continue to watch her. She did drop 9%. Maybe she can go a little lower. I like her for long term, 5+ years. Uh, yeah, so I'm just watching her on the earnings announcement before the bell tomorrow.
You heard about NBA?
Oh yeah, enlighten me on that real quick.
I
'Cause
don't.
you're
I just
one
saw
spoken.
it come across the screen on like ESPN. I was sitting at a burrito bar today and said MGM partnerships with NBA, which is fucking great. Just bet on LeBron, and
Yeah, right.
you'll win. You'll win every game. So Lakers this year.
You know, they also implemented their sports betting centers in their non-Las Vegas areas.
I'm gonna go
Because
to Biloxi every weekend.
they have property in Biloxi, they have property, I believe, in Lake Charles. They have that one, Lake Tahoe, and Atlantic City, Detroit. So they're kind of spread out. They have some properties out there, and now that it's legal across the nation, yeah, NBA first league with betting sponsor. So here you go.
There's that. That's a
So
thing.
I mean, and it sold off 10%. So I'm gonna see how we do, baby. I think I wonder if the shooter, quote unquote shooter, had um, any impact on earnings. Like, oh yeah, tourism and hospital or hotel stays are down because of terrorism.
Did they have an earnings call?
It'd be tomorrow.
Well, watch it carefully, baby.
We're watching.
Dude, I
Anyway,
should strangle it. I want to strangle a stock and not just the market.
give it a whirl, dude. Do something with MGM. It took a huge dip. Look at the chart. Tell me what you think.
Okay.
But tell them where they can add us real quick.
A few places. We are on Facebook. We have a new intern. He's coming in hot. He's going to post this episode next, right when it's edited. You can find us on Facebook at facebook.com/Rebel Trading Group. You can email us at Gmail. Our Gmail is rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's at gmail.com. We are on YouTube is our main platform, YouTube/Rebel Trading Group. Hit us a like, subscribe, and push that bell for those notifications, boys. Turn it on, and we are on StockTwits, SoundCloud, at Rebel Trading Group. Both of those, right?
Yeah. Remember, our newest 4 episodes will always be on SoundCloud, and our full archive of all of our episodes will always be available free to you on YouTube. I think that's an episode, bro.
That's
I think that's 31. All right, you can listen to one a day now, and that'll cover a whole month.
There you go.
I like it. All right, man. Well, I had fun. Good talking with you. Maybe we'll do it again on Friday. I don't know.
We'll see what happens.
I don't know. Possible. We always say that. Probably not. We'll see. All right, bro.
Thanks for joining us.
Later.